Today, I want to start a new series on using one of the tools within Investing Accelerator with you, which is the valuation ratios calculator. So within this tool, we look at price to earnings ratios, price to sales, price to cash flow, and price to book ratio to see if there is an undervalue or overvalue opportunity for a specific stock. And I'll include a little bit more details and explanation near the end of the video. And for this video, we're going to be talking about Starbucks. So here you can see, as of the day, I'm analyzing Starbucks. The price is $76, and we can compare that to the industry multiples for, let's say, PE. And then this represents a potential upside of 156%. If we're looking at PS ratio, it's 66%, and PCF is around 156% as well. So this puts target's exit range for Starbucks is around $126 to $195, which has quite a bit of room. So that is basically the valuation for Starbucks, and you can see in 1 minute, we can see Starbucks is undervalued. So if you combine that with technical analysis, then we can see that Starbucks has gone down significantly here at a discounted price. So then what the valuation calculator helps you to do is to plan for a potential exit and to figure out whether this is a discounted stocks. So that's the quick and dirty analysis for Starbucks. Let me give you the background training for this valuation ratios calculator. So within Investing Accelerator, I developed a number of tools to basically shortcut and simplify investing by a mile. So it allows you to basically use a lot less time to analyze a stock and basically to only use 1 to 2 hours a week to invest in the market. And this is one of the many tools. Here you can see I'm analyzing Starbucks as an example. So within Investing Accelerator, we have a more in-depth training. So I'm giving you kind of like the shortcut condensed version here. When you're looking at valuations, you only look at PE ratio, which is price to earnings ratio, which is actually only one of the 4 most common ratios. Now, when I'm looking at ratios, I look at all 4 of them because sometimes they're not reliable. Sometimes you need to look at specific ones to interpret it correctly. So that's why you need to look at all the ratios together. So for example, for Starbucks, I only have 3 of the ratios available that I'm pulling from investing.com. So here you can see that the current price is this much, the Starbucks ratio is this much, and this is the industry average I pull from investing.com as well. So this gives you a feeling of what Starbucks stock price could be if they're at the industry ratio. And this also helps you calculate what is the potential price or the valuation of what Starbucks would be worth if it is at the industry level. Now, sometimes it is not comparable because the industry figure is not reliable, and sometimes it is really far off, which requires your judgment to determine which ratios are relevant and which ratios are not. So in this case, you can see that there are no outliers at the moment, and it represents quite a significant upside for Starbucks given the amount of money and sales they're making. So if we're just looking at sales alone, then you can see there's a 66% upside for Starbucks, which obviously shows that it is at a discounted stock. And you can see PE and PCF ratio. Then when you're looking at the industry average, this looks a little bit off to me, so I wouldn't rely on it as much. And when you're looking at these kind of large increases, it doesn't get realized immediately within 12 months. Usually it would take a little bit more time to realize that stock price. If you're using ratios, you want to focus on long-term investing because the stock price is not going to bounce back to the industry level within a year or so. Usually it takes a little bit more time. But the benefits of this valuation ratio calculator is that you get a projected price calculated from comparing to the industry average. And this is actually what a lot of mutual funds or hedge funds will do. And they figure out what is supposed to be the correct multiple for the industry or for that specific company so that they can calculate the potential upside and also help plan for your exit as well. So when you're looking at the valuation ratios calculator, it is only a very small part of the Investing Accelerator analysis. You need to combine that with technical analysis. fundamental analysis, valuation, which is what you see here, news, and other analysis as well. So then you can become 95% confident when you're investing in the market. So that's what this series is about. If you're interested in learning how to analyze stocks, and if this is your first time here, then I would suggest you to check out the free training down below in the first link in the description. And if you're interested in being part of Investing Accelerator, then you can schedule a call with me and we'll have a chat and discuss how you can become a better investor and potentially accessing some of these tools as well. So I'll also include a link to book a call in the description as well. So if that is interests you, then you can click on that and schedule a call with me. And yeah, that's basically how this valuation calculator works. And if there's any other stock that you're interested in me using this calculator for you and record another video, then you can leave a comment below, subscribe, and I'll see you in the next one.